Silver and gold had one of their biggest crashes ever this past Friday, and now crypto is crashing over the weekend. We had a new Fed chair nominee, Kevin Warsh, that was a surprise to the market, and that caused a lot of unwinds across the board. We're going to get into why that was, where do we go from here, and all the top stocks to watch for the week ahead. I'm Chris with Investors Underground, and this is Sunday Scan. Every single week, we go over the most in play themes, topics, and news in the stock market so that you can get ready to trade in the week ahead. We're going to share a lot of good ideas and trade plans and go over some of the contributing factors to some of these record moves that we've been seeing and how you could prepare for them next time and just get a little bit more comfortable with some of these concepts in general. So, before we get into all that, I'll give the disclaimer now that I'm not a financial advisor and these are not buy or sell recommendations. Everything I'm going to talk about is for educational and informational purposes only. So, really, silver was the headline maker over this past week, and we've been tracking silver for a long time on Sunday Scan. And basically, the theme has been that there are driving macro factors that have contributed to a massive run up there. That's not the only thing. There was macroeconomic things, there was fundamental things, there was leverage products, there's options influences, there's narratives. There's a whole confluence of things that have led up to this run up. And then we got a huge unwind when we had a new catalyst, and that is the new Fed chair pick, Kevin Warsh. So we're going to talk a little bit about why that caused some of the unwinds in the sector, and basically where do we go from here? Where is money potentially going to be flowing to? Where is it potentially going to be flowing from? And we're going to get into all that right now. So I'm going to pull up a chart, and we're just going to go through a few concepts related to the silver crash and gold crash, and really a theme of a weak dollar narrative changing. And so what I mean by that is I'm going to pull up the chart now for the US dollar. So this is just DXY. This is the US dollar against a basket of currencies. So what's been happening over the last, couple of months, and especially, recently over the last few weeks, is that you've had this weak dollar narrative. And that's basically that the US has had kind of more easy money policies. Inflation's come down a decent amount. The Fed has been accommodative. They've been lowering interest rates. And then with all the tariff wars, you've basically had a lot of people, a lot of different countries lose some confidence in the US dollar. And so they've been reallocating some of those resources to other places. So if you were to look at the US dollar against the euro or against the Japanese yen or against a lot of other currencies, there's been big moves. And that was really, it all came to a head on, Thursday or Friday when the dollar really bottomed. So I think what had been happening is that you had a big down move in the dollar recently, and then it came to a crescendo, or basically a big tipping point recently after all the Greenland stuff. After there were threatening tariffs against Switzerland and the European nations and everything like that. That really led to an acceleration of the dollar's decline. And then what really set it off is that when Trump was asked about it, he said, the dollar's doing fine. We kind of want this, and that really caused a huge sharp move to the downside. And that started to spook markets a little bit. Everyone started piling into gold and silver. So even though they've already been trending for a long time on the way up, that really caused an acceleration in that move in both silver and especially gold as that ramped to record highs over the past week. So what really caused the unwind was it was a series of events that stopped the weak dollar narrative. So the first thing that happened is that after Trump made that comment that saying, basically we kind of want this, we want the dollar to be, a little bit weak, it's doing fine. That caused a huge flush down. And then right after that, you had Scott Bessent, who's the U.S. Treasury Secretary. He came out and said that, we want a stronger U.S. dollar. Like, we don't want this, huge unbridled slide to the lows. And so that was the first thing that put it in the bottom. And so we had some live commentary on that comment in Investors Underground saying that that was potentially the bottom for the US dollar. And in response to that, if that's a bottoming process, now you could have potentially a topping process in some of these other things. So that was the first stage to the dollar bottoming. The second thing that happened is that in response to the dollar slide, I think that Trump and Scott Bessent, they switched up their Fed nominee based on that, based on how sharp the dollar had been sliding over the last couple of weeks and the parabolic action that you saw in gold and silver. I think that that was literally a turning point of them changing their minds, because it was pretty 50-50 between a couple of Fed nominees. And then as soon as Scott Bessent wanted to kind of bottom the dollar there, that was when they changed the odds on Polymarket and all these other places that they were going to have more of a traditional or more of a hawkish Fed nominee. And so that's kind of like the real catalyst that spiked the dollar there. Once they announced that Kevin Warsh was going to be the Fed chair nominee. So why does Kevin Warsh actually influence the dollar, and what could that potentially mean as a new Fed regime coming in, and how would that be different than what was potentially going to be in place with some of the other candidates? And so basically, the way that the market has been interpreting, the Fed change that's going to be coming up is they really thought that the Fed's independence was going to be almost totally compromised, where Trump would just put someone in there that was going to lower interest rates regardless. The economy would overheat. It was very stimulative, and that's kind of been part of the narrative of why the dollar has been sliding so much. On top of all the other factors with the trade threats and everything else, so that was a contributing factor to that. Is that narrative is that the Fed was basically going to lose independence, and they were just going to be very, very accommodative. So after that nomination of Kevin Warsh, basically his whole take on it is that he's fine with lower interest rates because he's a big believer in the AI productivity boom. And so, if you were to look at like big turning points, like when the internet came along or when AI came along, there's huge gains in productivity, and that can actually be a little bit deflationary. And so, he's not super accommodative, to markets. He's not super stimulative because he just wants markets to be stimulated. He thinks that there was going to be kind of a deflationary force with some of the AI stuff. And so that's why he's okay with lower rates, but he's not like trying to pump the markets. So that's the big difference. So that's why he still aligns with the Trump agenda of lowering rates because he believes in the productivity boom. But he's kind of like a hawkish guy historically. And that means that he's not a huge fan of quantitative easing. He wants to kind of shrink the balance sheet of the Federal Reserve and all these other things that are, very different than kind of the easy money policies that have been in place at the Fed. So that's why it was a huge narrative shock and dollar shock, basically because that was a surprise nomination. And so after he was announced, that spiked the U.S. dollar, and that took all the leverage that had been built up in silver and gold basically out of the system. And so now let's talk a little bit about these parabolic mean reversion trades. How they apply to commodities, and then the confluence of factors that led up to them, and then how those eventually unwind, and why it's really a catalyst-driven unwind due to a number of things. So, if you were to look at silver and gold, they've obviously been in a trend for a long time, and they're still technically in uptrends. Just they fall back to more dominant trends. And so basically, what happens is that as you have trends that go on for a long time due to things like people betting on a weaker dollar policy, an accommodative Fed, and people losing some confidence in the US dollar, they're going to go to, where is a blow off valve for that? What is the path of least resistance? And because crypto has been such a mess ever since the treasury companies really stepped in, especially with MSTR and everything like that that's going on, we'll get into that later. Basically, silver kind of took the place of the speculative inflation hedge there. And gold was too. So silver and gold have been those blow off valves. And so that's kind of been the whole narrative for the last, 2 months or so, especially really speeding up. And you just saw dip after dip get saved. And the reason for that is because even though, yes, they were getting more and more overextended, there's a lot of factors that go into that. There was, some physical shortages in the metals markets, and then that builds onto the narrative. And then you have all these different products now, like the triple leverage silver ETFs. You have options driven moves. So you have all these things that are basically just okay. You have a trend in place, and now it just starts to build on itself and snowball higher. So the reason why Nate and I have been talking about, you really have to look at like a primary trend in place getting more and more vulnerable, but it needs a significant structural catalyst to actually cause a massive unwind as opposed to just a dip and rip that goes right back into the normal trend. Because if the main thing that has been driving it has been a weak dollar narrative and a flight to kind of, a dollar alternative, and since crypto wasn't serving that purpose, it was really more silver and gold. Until that, kind of changed, and with the dollar bottoming, that changed, that is what set off that reaction. So the higher something goes like this and the more leverage builds up around it, the more vulnerable it gets to that eventual unwind. And I use the avalanche analogy where it's like snow on a mountain, like it builds up for so long, but you need something to actually trigger that avalanche down. It might be ready to go, it might be ready to have that full mean reversion, but it needs something to set it off. And that catalyst of the surprise Fed nomination of Kevin Warsh was that catalyst that caused it to actually unwind. So now, we had that initial kind of bubble burst. And so, how do you actually think about this? How do you play this? And what are all the factors that go into like the massive mean reversion? So, once you actually have the catalyst in place of the dollar bottoming, now you have a new Fed chair nomination. It rewrites and changes all the assumptions that the market had up until that point, and so that can cause a big unwind in leverage. So, leverage from the futures market, leverage from the options market, leverage from ETF buying, and then leverage from just a lot of buyers being in here and being rewarded for buying all those dips along the way. And that's why it was such a frustrating trade for a lot of people on the way up, because it just gets saved a million times. Because until you have a structural change, then that is what basically tends to happen with commodity moves. They keep on to trend until they have that massive catalyst and counter trend catalyst to kind of change that up. So as you kind of get into a more granular view, we'll get into the hourly. There was a couple of setups that really took place here. One, you had towards the end of the week, kind of the topping process where you had an initial crack, it got saved, and now it's just kind of retesting those highs, clears them out, and it's struggling to break new highs. But it's getting more and more top heavy here as more and more people pile in. So the volume profile kind of moves up. And so you have more and more longs in here. And then you really need a reason for them to sell. So after this crack here, and then you eventually had the catalyst come out, and that's when it had the full unwind. You basically had that start. So it started to get below prior levels, making lower highs or getting below these prior flushes. But there's a couple setups here. So one is kind of the topping process and positioning into a big options expiration date, which was on Friday. And so you had that in confluence with the catalyst and everything else. So just a really good date to be looking for that. And then you had a couple of moves here. So that's like the first red day, or like the bubble popping with that catalyst. And then you have the initial flush. And then something that we talked about live and Investors Underground was kind of the bouncy ball break right around here. And so a lot of times with these major mean reversion moves, you have a couple of different phases. If you were to look at SMCI or MSTR, or many of these major unwinds, they all have the similar characteristics of a massive flush down that kind of gets everyone, like the longs pretty scared. It changes, the supply demand dynamics, where now so you have some longs that are underwater. And then after that initial very sharp move, you have consolidation and lower highs, basically testing some kind of a support level. And Lance Brightside talks about that a lot, about the bouncy ball break. And it's basically after a massive move down, you have some lower highs, you have some support building here, and then as that support starts to break, you tend to get that next leg down, like a symmetrical move there. And so, if you were to look at the setups from the Legends playbook, you basically have a whole lot of different things coming into fruition here with the first red day strategy / the parabolic mean reversion from Phil Gedeker. And then you have that bouncy ball break from Lance. That's his setup down there. And then as you got to the lows here, as it got overextended to the downside, you had a panic dip buy bounce from David Hanlon. So just right there, you have three different setups that all set up really, really well on Friday from the Legends playbook. So to basically build off of that, we're going to run a special just until Monday night at midnight. We're going to give you $100 off the Legends playbook if you use a certain coupon code. So we will link that code in the comments section. So make sure that you go to the Legends Playbook website. And if you get the bundle package of the Legends Playbook, which includes 8 setups from the world's top traders, use that coupon, you'll get $100 off for that deal. So that deal expires Monday night. So if you've been looking for new setups, if you want to learn how to trade this setup better, the unwind, the bouncy ball break, the panic dip buy, then definitely check that out. And we'll have that all linked in the comment section below. So very similar kind of theme and thesis with gold, the exact same process where you have a narrative. You have key structural factors in place. Then you had the dollar bottom, and you had the counter trend catalyst with the new Fed that caused the unwind. And then you can see it's just a very similar, process with that. The initial leg down, and then the bouncy ball break, and then the panic dip buy down there. So that's really what I want to cover with gold and silver. I'll get into the miners in a little bit about how some of the money could rotate to those after we consolidate for a little while, because this has been a major move. And after that, the market usually needs to consolidate and pick some new trends and directions. So now crypto is basically crashing over this past weekend, and really, crypto falls into that same category of alternative currencies, and usually that's been the go-to for like the speculative. As the dollar's declining, everyone piles into Bitcoin. But really, what happened, in my opinion, is that over the past year, Trump promised a lot of friendly crypto initiatives, and there's not a whole lot has really happened with that. You had massive ETF inflows. You had all these treasury companies buying. You had Sailor and MicroStrategy. They were a huge a portion of the demand for crypto and for Bitcoin in general. And so what happens is that as Master or MicroStrategy is now in a very vulnerable position because now they're basically flat on their Bitcoin position. They were up tens of billions of dollars because they were buying earlier on, but now MSTR is really in a bad spot. And you can just see this full cycle unwind from when they were initially buying. And then what happens is that they just keep buying higher and higher, and they get their average up to, $78 or $77,000 per Bitcoin. And now it's right at that level, at the time of this filming. So it just makes them super vulnerable. And now, they're not going to be able to buy Bitcoin the way that they were before. And so if they're not able to buy the way that they were before, and they were a major demand source for Bitcoin. So, now that the weak dollar narrative is kind of reversing a little bit, and you don't have that demand, now MSTR is in a very vulnerable situation, and that can lead to some market blow-ups or some deleveraging events. So that's going to be something to watch in the week ahead. We'll get into the main watches now, and kind of starting with MSTR. Yeah, this is really going to be on watch for some continued downside, but I think that MSCR will be kind of a narrative driven, product. But I think there's actually going to be some pretty significant moves in things like Hood and Coin if you have that crazy crypto weakness. Like, especially with Hood, it has been a huge beneficiary of the crypto market run up and kind of all the attention there. And so now you can see that this looks like it's getting pretty tired, and you can see it's kind of doing a rounded top against a level here, around like the high 90s or so. And so I think as you get kind of below those levels, you could potentially have a major unwind in something like Hood. And the same thing applies to Coin. Coin's just weaker than Hood right now. And so it's already been in a steady downtrend. But basically, anything that really benefits from a lot of crypto activity and trading, if that starts to slow down as the market's cooling off there and is entering kind of a more bearish market in Bitcoin and crypto, then a lot of the names that benefited a lot on the way up could really unwind there. So I'll be watching for those. We're still in earnings season. Another name I'll be watching for upside is BE. So I started to have a really nice breakout from kind of the thesis that we've had for the last, couple of, weeks or months, depending on when you start counting, because we've been trading this name a lot. But basically had a good breakout of these highs, and now it's just kind of consolidating as the market in general was weak. It just kind of pulled back and is retesting those. It has earnings, I believe, on February 5th, and so that should be a major positive catalyst for it. So we'll see if the market's weak enough, it can hold most breakouts back. But if the market is at least stable and they have really good earnings, then that could be another leg up that causes that huge like SNDK move that I've been thinking that's going to happen at some point in this name, where it's just a massive run up in the name, and then some good fundamental factors, big kind of recovery here, a little bit of like a cup and handle, and then a major breakout for the next leg. So I'll be watching BE to the upside over this upcoming week. We went over Hood, we went over Coin. Palantir, this also has the look of a very tired name, and this was like a market darling in 2025. And as you can see, it's kind of that big picture daily failed follow through look where it's kind of having that rounded top. It can no longer break the highs, but it's starting to test these lows. If it gets underneath, you could have most longs that have been buying since July or so be underwater. And if you have the market get a little bit weak, that can be a huge, way that this could unwind maybe back down to 100 or so. So that's just something on watch. They also have earnings coming up. So if they have great earnings, I expect it to be a ramp up and rejection. And if they have really bad earnings, then that could be a huge gap down until we test maybe the 120 or even down to $100 level. I think that we could see that in Palantir. And they've also been involved a little bit more with like the ICE narrative. So obviously very controversial, but as they've been doing that, I think some funds are backing off, and some people that maybe have been like a more loyal retail, a shareholder base, maybe they're backing out due to some of those factors too. So speculation on my part, but it's basically top heavy. It's starting to test these levels, and with an upcoming catalyst with earnings, unless the earnings are perfect, I think it's going to gap down. But if the earnings are really good, I think it'll gap up, but then reject over there. Google and Amazon also have earnings coming up over this coming week, and so those will be some big things. We had mixed reactions and things like Tesla, Microsoft, Apple, and Meta this past week, and so I think we're going to have a similar thing with Google and with Amazon. Google's clearly been kind of a leader of like some of the Mag Seven names, but I think you could also have a different phenomenon happen because if you were to look at how the market's been trading over the last couple of weeks or even the last couple of months, basically since the start of the year, especially, is you've had like a big broadening out in the market as people pile into momentum sectors, small caps, everything else. And so maybe if the market gets a little bit weak here, given that we have a surprise kind of hawkish Fed, new chair nominee, then maybe you get some concentration back into names like Google and Apple and Tesla or a few other names like that. So that'll be on watch. Now, on to kind of like the silver miners or the royalty companies in the silver space. So, this is actually a cool time to start a potential swing thesis on some of these miners because you just had the giant liquidation event in silver and gold. And so, what can happen is that can obviously spill over into all the miners. But now, if they flush basically back to a more dominant trend here, where it's just basically if you were to look at the general uptrend, it's still keeping that mostly intact, but it's at the lower edge of that. And so, an ideal thing for a swing trade in something like AG or in some of the silver miners, or after a massive flush out, basically to position in pieces as this is kind of consolidating and as these names are working towards earnings because they report earnings soon, and their earnings should still be magnificent based on these action in the silver and gold market over the last couple of months. So even if silver fell from 120 down to $80 or something like that, if their cost to produce an ounce of silver is still $20, and that hasn't really been taken into account yet, they have massive margins. They're going to be making huge amounts of money, and that will all be kind of revealed as they start to report earnings. So I think using this weakness to position into some swing positions to hold through basically earnings, I think that's going to be a winning strategy, and that's what I'm looking to do with some of these names like AG and even like WPM, which is more of a royalty streaming company. But again, still holding over its overall trend. It's good that the market in gold and silver flushed, that they're at more reasonable levels, but these companies are still printing money at even after the crash in silver because you have to remember, even though silver fell by 35% or whatever it was, 30% at the close, they're still up, silver is still up 200% or, 100% or 100, somewhere like that over the last several months. And so it's still very good for the company. So just kind of using the weakness in the physical metal to position into the miners as those start to get ready to report earnings coming up. CVNA, if the market gets weak, I always like to look for these big overextended like wounded names. So basically things that have been up a ton. Everyone knows the story with Carvana, and now it's had some short reports against it. So it's starting to get heavy. And if the market gets heavy, those are usually names that can unwind really nicely. It's already had a pretty significant move down, but things like CVNA, APP, the names that they're getting targeted by some short reports or things. Basically, anything that puts doubt into people's minds, those can unwind if the market gets heavy. And the market's been pretty steady, pretty consolidating since the start of the year. And so, if we start to break that range to the downside, then these could be some names that really follow that. And then we'll see what happens in some of the momentum sectors. We saw a lot of the rare earth names already start to unwind. We saw CRML, MP, UUUU, and a couple others really start to come in. So that was the same thing that happened in the fall in 2025 when money started to come out of the momentum sector. So we'll see if the space theme kind of follows that, if money starts to flow out of the space theme, or if it just starts to get saved and keep going. Open, this is another very top heavy name. You can see after the massive run up from last year, it's just kind of been consolidating. And now, if we're getting to a point where all these buyers, all these longs are in here and have an average somewhere in here, if we start to break below these lows, you could have a massive flush out in a name like that. So that will be on watch for downside. Boyle, this is basically natural gas, and we've had more cold fronts. And so this has been in play for the last couple of weeks and it's continuing. So maybe after this final cold front or the storm, it overextends maybe up to the high 40s or so, and then maybe it starts to mean revert a little bit there. But so far, still a pretty good trend in energy and aspects of the energy space there. IBRX, crap name, but it's also consolidating. So big run up, consolidation. Now it's just kind of basing. If it starts to reclaim some levels up here, maybe it has a squeeze out. And if it starts to break below these levels here, than a big unwind. So it can go either way, but basically having a plan for two scenarios because it's very short crowded and for good reason. So those usually are names that can have a pretty explosive moves either way. So drawing those lines on your chart and just having a plan for if it starts to creep back up, could squeeze out, or if it starts to break down, could really unwind all that positioning. And then with the silver and gold unwind, so another theme that was with that, with the weak dollar, with basically money flowing into emerging markets and things like that, is you have names like Baba and Baidu and PDD and even things like MELI. Meli. So basically, these emerging market companies, different themes, China, South America, anything like that, those have all benefited a lot from the weak dollar narrative. And so money's been flowing there. And so now that that narrative has shifted, you could look for some massive mean reversions in names like that, in my opinion. So keeping Baba, Baidu, PDD all on watch for some downside. And then finally, you have names like mRNA, again, recent momentum sector. It has some news. And I said to draw a line between or below this wick right here. And if it gets below that, then basically could have a big unwind. But if it starts to base at that, maybe the next leg up. So we're at that line, right around that, 3350 area or whatever it is. So have a line on your chart. And if it starts to break down below that, big unwind potential. And then if it starts to base above that, maybe the next leg up. So those are the main ones that I want to focus on for this week. Again, check out the Legends Playbook. We will have that coupon code linked in the comments, and it's a great way to learn, 7 or 8 new different setups from some of the best traders in the world, and for things that are very actionable on themes like silver, on themes like gold, and these big parabolic mean reversions with bouncy ball breaks, and then a panic dip buy. Like you will learn how to trade that in depth from some of the best people in the world to actually trade those setups. So definitely check that out, and that's really what I want to go over mostly in this scan. And again, just kind of focusing on a confluence of factors. Like the reason why gold and silver are such a difficult trade for a lot of people is because most people approach the market with, one or two strategies or one or two lenses. But what really happens is that, in markets, things are complicated. And so you have influences from different factors that kind of all come together in a lot of different ways. And so, taking into account these different factors with the macro narrative, with the dollar, with the counter trend catalyst, with the overextension, with the technicals, with the options unwind, with the leverage ETFs. There's a lot of factors that go into it. But if you were to actually look at all those factors, they all influence one of two things. They influence the supply or the demand. And it's really just, what profile does the stock or the commodity currently have? What is influencing that, basically trend and supply and demand of variables? And then when you have basically a huge shift in that, that's when you can get these massive moves. So hopefully that was helpful to you. Hopefully some of the commentary that we've had in Investors Underground and on Sunday Scan has been helpful for you to, do really well when those trends unwind and keep you out of trouble on the way up, most importantly. Because what tends to happen is that when you have really difficult trades that have a lot of moving parts to them, is that they can exhaust people out so much on the way up that by the time the trade actually arrives, people miss it because they're so exhausted. They're in a drawdown. They're so frustrated. So, part of trading is not only capitalizing on great opportunities, but it's keeping yourself out of trouble and learning what are the factors and the things that can keep you from getting into trouble so that you can actually maximize the opportunity. Because, if it's a huge difficult grind of a trader, like you're probably better off just finding something else to trade unless you can identify those key driving variables, know what was driving it on the way up, and then know when those factors can turn and what could make it extremely vulnerable to that unwind and then set off that unwind, not just from the technicals, not just from the fundamentals, not just from the macros, but from everything. Everything that impacts it is relevant to a setup like that. So hopefully that was helpful to you. Leave a comment, like, share, and subscribe, and then make sure that you check out the Legends Playbook. We will link the website, and then we'll have that coupon code. Again, you'll get $100 off the bundle package, and that will last until Monday night at midnight. So that's all I have. Hope that everyone has a great week and you trade them well. Take care.